Hi you guys, do you ever want to invest in dividends but you didn't know what stocks to pick? What if you could have an avenue to pick a whole bunch of stocks for you, all that pay dividends, and pay a small fee for it? Would you be interested? We'll talk about the 5 best dividend ETFs for 2019. The show. Today we're going to talk about 5 of the best dividend ETFs that give you a way to invest without having to go through the headache of picking individual stocks. An ETF is an exchange traded fund. Now these started in 1993 with State Street Spider Series. The very first ETF ever was 1993 and it was an S&P 500 index ETF. Much like John Bogle started the first index mutual fund in the 70s, also an S&P 500. The S&P 500 is the 500 biggest companies in the United States. These represent about 80% of the United States stock market. Now, a lot of these companies pay a dividend. What is a dividend? A dividend is money that they pay to their investors to keep their stocks. So, by holding dividend ETFs, you could have a basket of stocks, multiple stocks, all paying you a dividend every quarter. We're going to talk about 5 today, and the first 3 are going to be really low cost. Remember, I'm starting this way because you know that I'm a low cost guy. Now, if you stick around to the end of this video, I'm going to tell you which ETF of these 5 I personally use and why. Alright, so let's talk about the first one. Now, because State Street Spider Series was the first ETF, I feel like it's appropriate to start with the Spider S&P 500 High Dividend ETF. That's ticker symbol SPYD. Now, it's got a nice low expense ratio of 0.07% or 7 basis points, you guys. That means you're paying $7 on a $10,000 investment per year. Really cheap. Now, this particular ETF has 80 holdings. It has a current SEC dividend yield of 4.47%. That is good. Low cost fund, 80 different stocks paying you a dividend. Okay, the second one is from my favorite company, Vanguard. And it's the Vanguard High Dividend Yield ETF, ticker VYM. Now, VYM has an expense ratio also of 0.06%, just 6 basis points. It has a total of 421 holdings. So it's got a majority of the S&P 500. Now, some of these companies pay a higher dividend, some pay a lower dividend, but they have a lot of stocks to pick from. It's got a current dividend yield of 3.29%, so pretty good. Big diversity, low cost. Good answer. The third one we're going to talk about is the iShares Core High Dividend ETF. Now, for those of you not familiar with iShares is a division of BlackRock. BlackRock is the biggest investing company on planet Earth with over $7 trillion of assets under management, you guys. And iShares is the biggest division of their company. iShares controls all of their ETFs. They have hundreds of them. This particular ETF, the iShares Core High Dividend ETF, ticker HDV, has a nice low expense ratio of 0.08%. or 8 basis points. It has a total of 74 holdings. It has a current SEC dividend yield of 3.22%. So right in the same ballpark. Notice it's a little bit fewer holdings. They're concentrating a little bit more on picking companies with a little bit better dividend payout. Okay, the next 2 we're going to talk about, you guys, are a little bit more expensive as far as ETFs go. And we're going to talk about why that is. First one we're going to talk about again is the Spider Series S&P Dividend ETF, ticker SDY. Now SDY's got a expense ratio of 0.35%. So you're talking 6 to 7 times more than the other ones, right? So why are we paying more for this fund? Well, this follows the S&P High Yield Dividend Aristocrats Index. And by that index, the companies that it picks have to have had an constantly paying dividend and increasing it for the past 20 years. Now, this has 112 holdings. So of the 500 in the S&P 500, they've picked 112 they feel have been paying a dividend for 20 years, and it's been increasing, so they're stable companies, you guys. This one has a dividend yield currently of 2.82%. Now, the first thing you might say is, why would I pay more for one that's yielding less? You're paying for security. You're paying for more stable companies, you guys. This is important. These are companies that have been paying dividends for at least 20 years. Now, the final one on my list is one that is a dividend investor favorite. That is the ProShares S&P 500 Dividend Aristocrats ETF. That's ticker NOBL. Now, NOBL has an expense ratio of 0.35%, so the same as the last one. But it's a little bit more picky in what it picks. Now, by this, the requirements of this fund say that the dividends, the company has to have paid an increasing dividend consistently at least 25 years. And most of the companies have actually been paying for 40 or more years. So these are solid companies, you guys. It currently has 57 holdings, but it also says in the rules that a minimum of the 40 holdings will be equally weighted, and that no sector in this fund can make up more than 30%. So it's got some very strict rules on what it will do. It's a passively managed fund, but it does change the stocks that it holds from time to time. Now, it does have some turnover. With turnover, that means costs. So it's a little bit more expensive. Currently, this has a dividend yield of 2.51%. Again, you listen to that and you say it's a little bit lower than the other ones that cost less. But these are all stable companies. These are companies that weather the storm when we have a recession. These are companies that you do not have to worry about continually paying those dividends and making that passive income every quarter. I promised that if you waited till the end of the video, I would get into the one that I personally hold. Now, I personally hold this because it's got so many holdings. I hold Vanguard High Dividend Yield ETF, ticker VYM. I personally love Vanguard, but I hold this because it's got a decent, consistent yield of about 3 to 3.5%, and it has 421 holdings. So it's very diverse in its holdings. It's got all sectors covered. It's got a wide assortment of stocks. It's a pretty solid investment in my eyes. So if you're thinking about investing in dividends, the easiest way to do it, you guys, is either find an ETF, which we've talked about, or index mutual fund and invest in those. Picking individual stocks is fine. Remember, you have to do your homework on it. The easiest way for me is to pick an ETF, invest in it continually, and I make the dividend. I make the passive income. If you guys enjoyed this, give me a thumbs up, subscribe, leave me a comment. If there's anything I talked about that you didn't understand, please ask it in the comments. If you want more information on a particular ETF or particular stock in dividend investing, leave in the comments, you guys. I'll make a video about it. Till next time, I make a couple videos a week. We'll see you next time. Take care of yourselves. Bye.